Welcome to today's presentation, Market Preparation, Trading Gaps, and Trading the Open. My name is Dan Gibby, Senior Pristine Trained Trader and Lead Moderator of Pristine's Advanced Stocks and Derivatives Trading Room. We have 3 of them where we give hands-on advice about the markets, we answer questions, we give stock pick ideas. So it's a virtual trading room, just as if you were sitting right next to one of our senior traders in one of our offices. Our Pristine ESP software you see on the top right. I will give you a number of examples throughout this DVD on showing how this software found tremendous opportunity for us during the market day. Greg and Oliver's book, #1 bestseller, Tools and Tactics for the Master Day Trader. First half of the book is separated into how Wall Street really works. It's an absolute must-reading. I tell my students, read it once a year, because every single year when you have more trading maturity and experiences under your belt, the lessons learned in the first half of the book are absolutely priceless. The second half of the book focuses more on the tools and tactics of technical analysis with some market internals. And you could get that in that book in addition to our seminars. The bottom right shows our newsletters. We have 4 newsletters now based upon various swing to core trading styles. And obviously the DVDs that we make, which is what you're watching right now. This shows some of the public recognition and accolades that Pristine has received in being #1 educational firm. 3 of them I mentioned here, Barron's, Stocks and Commodities Magazine, and Forbes, among many others. What does it take to be a successful trader? Many books have been written on that subject, but we believe that 85% of successful trading is actually more psychological, battling the demons in your head. Pristine Method Part 1 and 2, we can teach you all of the intricacies of chart patterns on various time frames with market internals, money management, but then it's up to you to follow the rules. So let's just take a look at some of these bullets here. First of all, this goes without saying, but trading is a business, so you must treat it like one. And hence Malcolm Murray's seminar of managing your trading business. This is not a hobby. If you are coming to the markets for entertainment, we highly recommend that you close your account down and go to Las Vegas or go somewhere where you can have more fun for entertainment. It is not the financial markets. The markets have a way of deciphering out that type of personality, and it will quickly rob you of not only your financial but your emotional stability and send you to the poorhouse without proper education. Next, you need a defined method. That means you have to develop a methodology through this trading plan of knowing exactly why you engage in the financial markets to take a speculative trade. It pains me sometimes, particularly with trial members in one of our real-time trading rooms. They might ask one of us moderators, hey, Dan or Paul or Simon, Avery, Susie, what do you think I should do with XYZ stock? And we collectively would scratch our head and say, well, sir, why did you enter that stock in the first place? And he might say, well, I don't know. And that's what the method is. And we teach specifically the methodology looking for what we call compelling setups, what I'll get to a little bit more in a few moments. That is the prerequisite before engaging in the market to make sure the odds are stacked in your favor. Otherwise, cash and staying on the sidelines is a position. Next, you need to choose what time frame that you are going to focus on. The Pristine method applies equally if you want to be a scalper or active day trader, where you're in and out of stocks from 10 seconds to 3 hours, and then shut down your computer and go to work or go play golf. That's totally an individual decision, which we respect. Alternatively, you might say, Dan, I'm retired or semi-retired. All I want to do is core trade. Core trading to us means holding periods from weeks to months and looking at longer term charts, time frames in which to make your entry, management, and profit-taking decisions on. So you must decide that and not jump all over the board, because then you're going to be making incorrect decisions. Obviously, you need to choose what instruments you want to trade. Again, everything Pristine teaches applies to anything that moves, that will move based upon an imbalance of supply and demand, which is rooted in greed and fear. If you can chart it, we can trade it. So it's up to you whether you want to trade stocks or options or futures or currencies or pork bellies or lumber contracts. Totally up to you. Once you've decided that, you have a compelling pattern, then you time that entry with the market internals, which we'll get to. Money management. I give, in my advanced labs, I give some very interesting money management exercises, because I do it to illustrate this principle as follows: that even with the best method, even with the best everything, best timing, best whatever logic you do to enter a position, without proper money management, the odds are staggeringly against you. But on the flip side of that, if you have proper money management, I believe that even if you have a sloppy methodology with proper money management, you can still make money. Now, I'm not suggesting that, but the one assignment that I give to my advanced lab students who have graduated Pristine Method Part 1 and 2, and then our laboratory is meant as a hands-on integration laboratory of those advanced subjects in live market conditions. Just impromptu, I'll say, ladies and gentlemen, I want you to buy me the following stocks, 1,000 shares of each. I want you to short me the following stocks, and then I'll say, manage. Just go to work and manage. And we are professional technicians who can manage. So the first thing I want to see them do is, and I use silly analogies with my students all the time. One student might be saying, oh, well, I'm looking around to buy some more inventory, and then I remember screaming at this one young fellow. I said, what are you doing looking to buy stuff? You got aisle 6 is on fire, making an analogy to a retail store. We approach trading like any retail business. All we're doing is trying to accumulate merchandise, if you will, and then resell or liquidate that merchandise at a price where we profit from the difference. So we don't hold judgment on any individual stock. A stock is good, if you will, if it's doing what it's expected and we're making money. Otherwise, we just get rid of it. It's like pulling weeds out of your garden, out of your rose garden. So very, very powerful examples of money management. Finally, with all of that said, you need the discipline and patience to follow your method. So when you're in my trading room, in one of our offices where I can see you, when the odds are not in our favor, and maybe it's in front of FOMC day, we have all kinds of conflicting messages, I want to see your feet on the table with you reading a Wall Street Journal, or whatever your pleasure is, or going to the gym, or shutting your computer down and going home. Because not having the discipline and patience when the odds are in your favor is a sure way for you to lose all of your money. Here's another matrix that talks about the trading plan. I have a few copies here of the DVD covers from Greg Capra and Paul Lang. But I just call this a successful trader matrix, if you will. Right there in the middle at the top, I need a compelling technical pattern. No setup, no trade. So in our trading rooms or with whomever you're communicating with, yourself, before you consider engaging in the market, you need a compelling technical pattern. I don't care about the fundamentals. I don't care about any other nonsense. No pattern, no trade. Once you find that compelling pattern and the market internals are on your side, those are the two DVDs that I showed you here at the top that Pristine President Greg Capra did. Absolutely phenomenal. One on intermarket analysis to show you how all of the markets are interrelated, both worldwide all the way down to various sectors, and how to find tradable opportunities from those relationships. And market internals, which with the DVD focuses on market internals not only for the active day trader, but all of the way to the swing and core trader. I'm going to share some of the market internals with you today necessary for swing trading. So once you find this compelling pattern, that has a compelling reward to risk, obviously. We recommend 3-to-1 minimum, which means at least $3 of gain, which is your target potential, to every $1 of your stop loss. 3-to-1 before we engage in a trade. Once you have a compelling pattern, you enter the trade and you set your protective stop. All you're doing in between is managing that position. So if you've truly accepted the compelling nature of the compelling pattern and you've accepted through proper share sizing the maximum loss of that particular trade, there's really nothing to fear in between. Because the only things that can happen are you've met your target or you've gotten stopped out. And that's where we just enter the management mode. On the left side of this screen are just various components that should be included in your trading plan. A trading plan should be specific enough where it describes not only your entire trading business, but then you have a trading plan portion of your business plan. And so I've just given you a couple of the categories there. What type of trading are you going to do from the day trading to the core? It should describe your hardware and software, the setups that you individually are going to trade. I personally trade every single pattern that we teach, and then some that I've developed. We have our beginning traders focus on a very small, narrowed list so they don't become a master of try to be a master of all, and that doesn't work. We want them to be a master of a few before growing their comfort zone to other setups. And so you can just read there on the left there, all of these should be included in a thorough trading plan. And as I mentioned, there on the bottom right is the DVD cover for Paul Lang's DVD on how to create a master trading plan. Let's go ahead and begin now on preparing for the market. Preparing, as you can see in the title here, closing bell. What do I do every single day when that bell rings? First thing I do, I'm going to monitor any post-market news or stock movers. And I have various alerts and newsletters, and I can even see them scrolling on the ticker to show me things like that. I'll keep the real-time trading rooms open. Paul Lang, I know, has weekly, if not daily, lessons in his room after the market. We have the Pristine free lessons after the market every Wednesday. And in all of our rooms, we post live lessons in addition to chart lessons every single day. Next, every single day I have my watch list. And I'm going to get into shortly how I rank the watch list into tiers 1, 2, and 3. So after the market's closed, no bells are going off anymore, I look at every single item that I put on that watch list for the day. I do this for many reasons. One is people get confidence in patterns by looking at them over and over and over and over and over again. So that's why, with my 9 years of experience and 60,000 trades under my belt, I see a particular pattern and I could start salivating on it, whereas I can teach that pattern, but to somebody who hasn't lived through all of those examples, doesn't have the confidence that I have. So based on that, every single day after the market, if that stock warranted being listed on your watch list, either before the market day or anytime during the day, well then by golly, it's up to you to look at it at the end of the market day to see how it worked. Trust me, you'll be telling yourself, oh, that one worked tremendously. I can't believe I didn't buy a couple thousand shares. Or that one really failed miserably. And every one of those that you look at becomes imprinted in your brain, in your memory bank, and that's what generates that confidence, is the constant repetition. And then, in addition to that goal, I want to see if I want to continue to watch it. So if I still like the setup, I'll just immediately put it on my watch list for the next day. And then I'll also update my longer term watch list. And those are the ones that may take a few days, even a few weeks to set up, but on multiple time frames, they are setting up for major, major moves. And so you have to watch them every day and set alarms just so they don't get away from you. Next, I want to develop my trading bias after the market's closed. So that's obviously going to be my trading bias based upon how they close for the next day. I look at the broader markets, the S&P 500, the Dow 30, the NASDAQ 100, and the Russell 2000. Those are my general 4 broad market categories. I watch about 16 sectors and market internals. I'm going to show you all of these. But what I do, and this only takes me about 5 minutes to do. So everything on this sheet right here probably takes 15 minutes. And then what I personally like to do, you have to develop your own personal trading routine. And I hope to give you some examples of these routines in this DVD. But what I like to then do is go out and exercise. And I come back fresh for my scanning. Here are once I look at the broader markets on multiple time frames, these are the sectors that I look at. You don't have to look at all of these, but I listed the major ones here for you. And I personally put them in my level 2 box, which is linked to multiple time frames, because I want to see them if I might get a day trade opportunity out of it or a swing. And we define a swing trade opportunity as a holding period typically from 1 to 5 days. Or I might say, oh my God, look at the transports here are breaking out of a multi-year consolidation. So then that would allow me to focus maybe on some core trades in the transports. Created sectors. There's many stocks that don't have a sector. So what I do is I just create my own sector by making a little market minder and putting those particular stocks, and I look at them individually. Alternative fuels, grocery stores, storage stocks, metals. It doesn't fit into that sector category, and therefore I have to look at some of those individually because those are stocks that I still want to watch. Then I look at my market internals and indicators, and I'll be showing you how to do some of that. Now, for a swing bias level, I want to determine if the markets are beginning to make an expected 1 to 5 day move up or down to allow me to engage in swing trades that would have high probability of continuation. So you would want to do this both with the broader markets and your individual stocks of interest. Here's my checklist for you. First of all, make sure you have a compelling technical setup. And in these slides, I'm going to show you a bullish technical setup. So again, we teach this in our Pristine method courses 1 and 2. It might be what we call a Pristine buy setup, a breakout, a guerrilla trade, etc. Next is the broader market on a major moving average. Is it on support if you're going long? What was the retracement from the prior high? And then I'm going to show you these 3 indicators and the market internals that I follow. So this is my table of contents for answering the question, is the broader markets at that compelling bullish swing pivot level? So let's attack these one by one now. Moving averages. They are superior trend following tools. What a moving average is on any time frame, and whatever number moving average you're interested in, it just takes the closing price of a particular bar, goes back X periods, adds them up and divides by 20 if it's a 20 MA, and divides by 40 bars if it's a 40 MA. For swing trading, this is the picture that we're looking for bullish. We have beautiful higher highs, higher lows. We have strong uptrending and rising 20 and 40 period moving average with the 20 above the 40, and it's rising in a controlled manner. For those of you who have taken Pristine Method Part 1, you might have heard us refer to these as parallel and railroad track rising. So moving averages in this particular example is perfect. Now, what do we mean about the retracement? Retracement analysis, we use it to determine how strong or weak the stock or issue, whatever you're looking at, is relative to the prior move that it made. So let's just take a look at some of these. Fibonacci is the gentleman who invented these Fibonacci levels. And he concludes that prices typically reverse at these numbers that he came up with, 38.2%, 50%, and 61.8%. But that's something that we call subjective. That's just a number floating out there. Whereas Pristine teaches that it's better and more accurate for these Fibonacci retracement levels to be in alignment with some price congestion to the left. So let's just start and show you how we measure these. And let's the bottom left there, where HL and MA turning up. So that's the first higher low. And see how the 20 and 40 are pretty much sideways, but then we made a higher low and the stock blasted up through the prior high, allowing the 20 and 40 moving average to turn up. So the retracement levels in this first example I'm marking as 30%. And you measure it, that retracement from that high, relative to the prior low and prior high. We just eyeball it. We don't need to get these Fibonacci levels, which should be on most direct access software programs. We just eyeball it. So retracements of 40% or less are preferred in a strong trend. And why do you think that is? Just think for yourself for a second. As the stock is pulling back retracing. If the stock doesn't retrace much at all, that means that it's strong, that buyers stepped up to the plate to buy that stock. If instead it retraced very deep into the prior low, that means that the buyers were not as aggressive, and in fact, selling was a lot stronger than had been anticipated. So the prior strong move is not as strong as we thought. Just continuing with this example though, it's going up, higher highs, comes back. You can see the next one there held at 30%, right onto the rising 20. That's strong. The next move up, it went sideways. It didn't even retrace. We call that a bullish consolidation over time. Next one came in roughly 40%, held on the rising 20. The next one, you can see these 30%, 30%. And then the very last one, this stock, and we teach this in our Pristine method part 1 and 2, that very last run is a very strong indication of possible trend change, or at least multi-week consolidation, because that had the biggest rally and it had the biggest ugly sell-off in this entire stock's advance. You can see it roughly fell or retraced 80% with 3 big ugly red bars. So we would actually look to, if we were in this for this whole ride up, that's a strong indication to get out on the next bounce and possibly even look to short it using principles taught in our other courses. Now, I'm only going to show you 3 oscillators. I'm not going to bombard you with these. I think Metastock is one trading software. At last count, I think it had 194 different oscillators. Pristine focuses on price. As you can see there in the first bullet, an oscillator is what we call a derivative. If you just look up in Webster's, derivative means derived from. So these 194 oscillators are derived from price and volume. We instead just like to focus on price and volume then, because that's objective, and people who are not trained to use oscillators the way that Pristine teaches in an objective manner, they can give you many, many, many false signals. But they do provide good overbought and oversold signals in sideways markets. In trending markets, like the last slide I just showed you, rising 20 and 40, if you use any oscillator, you only, in an uptrend, you only want to focus on the oversold readings. So that's when the oscillators get oversold, because that should then correspond with a buyable pullback in the price action. So in downtrends, the opposite's true. Any oscillator whatsoever, we are only interested in overbought readings, because we specifically, and we aren't going to do it in here, but we specifically teach you through what we call a Pristine sell setup, how to short into those bounces into downtrends. Divergences between oscillators and the price chart can give clues. I'll show you